Welcome to the 5-Minute Real Estate Fix. I'm Chase with the Whitney Team and First Team Real Estate. Today, we're talking about something unexpected happening right here in Cypress and Orange County. Homeowners with 3% mortgage rates choosing to sell. For years, the advice has been very simple: never get up your low rate. But local residents are proving there's more to the story. Life changes, accumulated wealth and equity, and long-term planning are now outweighing the monthly payment math. And if you're wondering whether it's time to make a move, or if you're a buyer waiting for more inventory, this episode is for you. Let's break it all down. The biggest factor driving the shift: equity. Cypress homeowners have built massive wealth over the past decade. A typical single-family home that sold for $450,000 in 2014 now commands well over $800,000 or $900,000. And that's not just appreciation. That's real wealth that changes how families approach major housing and financial decisions. Over the past 5 years alone, the average Cypress homeowner has gained over $147,000 in housing wealth. Think about that. If you bought a modest starter home a decade ago, you're now sitting on hundreds of thousands of dollars in equity, whether you stay put or decide to sell. And here's the thing: that equity bridges the gap. A homeowner with $300,000 in appreciation can absorb the difference between a 3% mortgage rate and a 6% mortgage rate. The monthly payment is higher, sure, but when you calculate your total housing cost as a percentage of your net worth, it's actually gone down because your property value has increased faster than borrowing costs. This isn't just theory, it's happening. Families are using that equity to make moves that weren't possible during the market frenzy of recent years. The second factor: life circumstances. Growing families need more space. Empty nesters want less maintenance, and career changes require relocations. And these priorities are now overriding the rate concerns that kept them staying put in the past. Young parents who purchased starter homes 5 years ago are outgrowing their 2-bedroom condos. The arrival of that second or third child triggers the realization that cramped quarters aren't sustainable long-term, regardless of mortgage rate differences. On the other end of the spectrum, pre-retirees are looking to downsize. They want to reduce maintenance responsibilities, lower property taxes, and access their home equity to fund retirement activities. Many are discovering that moving from large family homes to smaller properties or condominiums provides both financial relief and lifestyle improvements. And then there's the career factor. Professionals receiving promotions with longer commute times are prioritizing proximity to new workplaces over maintaining low mortgage payments. Remote work has also shifted priorities. Some homeowners are seeking larger homes with dedicated office spaces, while others are moving to more affordable areas now that daily commuting might not be required in their industry. The pattern here is clear. Families are recognizing the daily quality of life, children's educational opportunities, and long-term happiness matter more than preserving ultra-low mortgage rates that may not align with their current needs. Here's what's happening locally. Mortgage rates have settled into the 6 to 6.25% range, creating a predictable borrowing environment. That removes the uncertainty homeowners face during volatile rate swings. The average Cypress home value right now is floating right at $1 million, an increase over the past year, and properties are going pending in about 3 weeks. These metrics demonstrate that buyer demand remains consistent despite higher financing costs. And regionally, the momentum is building. Southern California sales rose 11.3% year over year, and over 257,000 homes changed hands statewide on a seasonally adjusted annualized basis. That's substantial transaction volume supporting healthy market function. For sellers, this means confidence. Your home will move if it's priced right and staged and presented properly. For buyers, this means more opportunity. More inventory is coming to market as homeowners make moves based on life priorities, not just rate speculation. The market is certainly not crashing, it's rebalancing, and that's creating healthy opportunities for everyone that's interested. If you're a homeowner sitting on a low rate and wondering if it's time to make a move, here's the bottom line: calculate your equity, evaluate your long-term housing needs, and consider how current market dynamics might work for your specific goals. The homeowners making moves now aren't waiting for perfect conditions. They're creating the right conditions through informed planning and decisive action. And if you're a buyer who's waiting for inventory to improve, pay close attention. This is what improvement looks like: motivated sellers, predictable rates, steady turnover. It's not a frenzy, it's a functioning market. If you're thinking about buying or selling in Cypress or anywhere in Southern California, reach out to us. We'd be happy to help you make the smartest decision for your family. And check out the full blog on this topic at 4realestatehelp.com/blog. That's the number 4, realestatehelp.com/blog. We break down the equity numbers, compare regional trends, and give you the data you need to make your next move. Thanks so much for tuning into this week's episode of the 5-Minute Real Estate Fix. I'm Chase with the Whitney Team, and I'll see you around town around the next episode.